Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right, let's go right now to June Grasso, a Bloomberg legal analyst and host of the Bloomberg Law Show, joining us on the Supreme Court upholding the law that threatens U.S. TikTok shutdown. What do you know?
So this was a unanimous decision, and what basically it does is it says that national security concerns are more important than any of the free speech concerns raised by TikTok or the content creators who appealed at the Supreme Court. And this is pretty much expected, maybe not that unanimity of it, but during the oral arguments, justices from across the ideological spectrum were questioning whether TikTok really was sort of safe, whether TikTok, the Chinese parent, might somehow use the data of millions of Americans and store it, or use data against Americans, or engage in propaganda campaigns on TikTok. There were all these huge concerns raised, and there wasn't that much concern for the free speech rights of the 170 million Americans who are on TikTok, or TikTok's free speech rights, or the content creators' free speech rights. So, and it's not unusual, I think, because usually when there's a case that says national security, it's like a big red sign to judges saying, well, this isn't my area. This is the area for the executive branch or the legislative branch. What do I know about national security? So it tends to fall by the wayside in light of other concerns.
So this was largely expected, as you mentioned, and then also we should be seeing this action actually being taken place on Sunday, if I'm not mistaken. What is it like in action? Are we seeing the app being removed from people's phones that are here in the U.S.? Is there any discussion about what this could look like, or is it an unknown?
So what will happen is TikTok, according to what its attorney said at the Supreme Court, will go dark on Sunday. And the point of this really is to, I think, and I've read other people talking about how it's to send the message to those 170 million Americans that you're not going to have TikTok anymore. But actually, TikTok can remain, if you have downloaded it already, it will remain on your phone. The problem is not with what TikTok's going to do so much, but what the companies that support the platform, like Apple and Oracle and Google, what are they going to do? So there is this theory that President-elect Trump could say, my Justice Department is not going to enforce this, so don't worry, Apple, don't worry, Oracle, we're not going to enforce this. But then, are they really going to take that? Are those companies really going to take that as assurance when the fines would be massive, $5,000 per use? So just imagine what those fines would look like.
Per person with a TikTok downloaded app.
So people I've talked to said they doubt that that Apple and Oracle would actually support TikTok. And so then TikTok would gradually lose people, and it would gradually sort of disappear. But there are the funny thing is that a lot of TikTok users calling themselves TikTok refugees are going to other platforms now, but a lot of those platforms are Chinese owned as well.
I was seeing that.
Right.
Yeah.
Red Note.
Exactly.
Yeah.
So legally, for the companies like you mentioned, Oracle and Apple, you can download the app now until Sunday. You just can't update it anymore, and that's where the issue is.
Yeah.
Do they have a legal standing?
You mean Apple and
Or yeah.
I don't think so. At least they weren't involved in the Supreme Court as parties in the Supreme Court case. They don't really have what I would say is legal standing. But, you know, millions of TikTok users might say that they have legal standing, and they weren't represented at the Supreme Court. So it wasn't so much a standing issue as just this national security concern overweighing everything. And also what's kind of unusual, and the justices talked about how there was secret evidence, and we haven't seen the evidence of that. Apparently some of the senators and the lawmakers have seen about the dangers of TikTok. And in fact, the circuit court, the DC appellate court that ruled unanimously as well to keep the ban in place, didn't even use that evidence to make its decision. They just relied on what Congress said. So it'd be interesting if we ever see that evidence, if it exists.
So what could actually be done to change this decision? You mentioned Trump. Are there any other Hail Mary situations in terms of the fate of TikTok?
Well, I mean, right now, the president is Biden still, and he has said he's not going to, or it's indicated he's not going to do anything about TikTok. When Trump is inaugurated, the ban will already be in effect. There is a question, there's a provision in the ban that gives 90 days to a president if TikTok is engaging in sincere negotiations to sell the platform, if ByteDance is. And I'm not quite sure, legally speaking, whether there'd be an issue about whether it starts to run with Biden or starts to run with Trump once the ban's in effect. There's that. The Washington Post has reported that Trump has suggested he might issue an executive order to put the ban on hold. I mean, that would be questionable legally, an executive order like that, but I don't know who would oppose it at this point.
Right.
So there are and as I said, Trump can just say to the Justice Department, don't enforce this. He spoke with the president of China today and said they discussed TikTok and nothing more than that. So, we'll see. There are things that can be done. I mean, Congress could pass another law. And, with the weight that Trump has with Congress, as we've seen from these, hearings and everything else, maybe they could pass another law and, take away the ban.
June, we appreciate it. I know it's
Sure.
always hard to jump in right after breaking a Supreme Court decision, but we very much appreciate you, June Grasso, Bloomberg legal analyst and host of the Bloomberg Law Show. Let's get more on this now with Matthew Schettenhelm, Bloomberg Intelligence media litigation analyst. He is standing by on this news. Again, the news Supreme Court has now upheld the law that threatens to shut down TikTok social media platform in the U.S. as soon as Sunday. All right, Matthew, were you surprised by the decision from the Supreme Court?
I was not surprised. The oral argument last Friday was consistent with this. The question in my mind was really, was this going to be unanimous? I thought there was a chance TikTok could win a couple justices. With looking quickly at the opinion here, it looks like the court wrote a per curiam decision for all 9 justices. There were a couple concurring opinions from Justice Sotomayor and Justice Gorsuch, but both of those they expressed a different view, but they went along with the judgment. So this is a 9-0 loss for TikTok. This is what we expected after the appellate court ruled against TikTok earlier this year. The Supreme Court is doing exactly what that appellate court said, and so the law remains in place. The ban takes effect on Sunday.
Well, Matthew, in your note, you mentioned that Senate Minority Leader Chuck Schumer was signaling support for a ban extension. What does it look like now that we've heard that the Supreme Court will be upholding this ban? Yeah,
so the logical way for this ban to go away is not the president issuing an executive order. The president can't change federal laws by executive order. What he can do is convince Congress to change course. And I think TikTok got its first real good news yesterday when the Democrats' leader in the Senate, Chuck Schumer, came out and said, look, there's real concerns about TikTok, and we still need to force a sale, but let's give them more time. And when you have Chuck Schumer for the Democrats and President Trump for the Republicans both saying that, to me, it's a pretty good sign that Congress is going to find a solution to extend this, to push it back at the very least. The problem, though, is that the timing here, this takes effect on Sunday. And Congress is, unless they have unanimous support in the Senate to do this, I don't think they can do it very quickly. It takes a matter of days to debate these provisions. And so the harder question is practically when Congress can get this done with the ban looming and set to take effect on Sunday.
The other question is who would buy it. Morgan Stanley actually saying that Amazon could be a good suitor for TikTok. We heard the Chinese government saying that, well, maybe if they sold it to Musk. What do you think?
Yeah, the big question is what are they selling, and will ByteDance sell anything to me? Because there's real doubts, I think, that ByteDance would ever agree to a sale of the algorithm, or that China would concur with that. And so that's the first question of what are we even buying here, and is that resulting product going to have the secret sauce that makes TikTok what it is? And so I find it difficult to speculate about that. given, we don't know what could be for sale here. And there's a real possibility that ByteDance is not going to be in a position to do a sale at all. So far, they're, if they succeed in Congress in pushing this back, maybe they keep playing hardball and not seriously considering a sale.
Matthew, what does this mean for U.S. competitors? Of course, we have Meta, Snapchat. If you think about Instagram Reels, they're all willing to hop in on this situation.
Yeah, it's great news. I mean, right now we are looking at a ban taking effect on Sunday. And if TikTok goes dark, as TikTok's counsel told the Supreme Court it would if the court didn't issue a stay, those users are going to need to go somewhere. And so it's a great opportunity for Meta, for Google, for Snap, for those users are going to need to find a new location. And so I do think, as I said, there's a pretty decent possibility that Congress turns the lights back on. And so then maybe they go back, but this is disruptive. And so that creates an opportunity for TikTok's competitors.
Yeah, and also disruptive for all the influencers who are making money off of TikTok. Like, what
small
do you do?
businesses?
Small businesses, same thing. All right, Matthew, thanks a lot. Really appreciate you. Matthew Schettenhelm, Bloomberg Intelligence Senior Litigation Media Analyst. We'll be watching that. Are you a TikToker?
I am.
You are, okay.
I did tell Mark, our producer, that I might sob on air if I heard about this news, but
you didn't.
I'm holding it together.
You held firm. What would you miss the most? Like what?
I miss the food recipes. If I'm traveling somewhere, I look up my entire itinerary through TikTok, people who are on the ground there telling me what to do.
Huh. And you can't do that through like Instagram.
I don't find that the same search engine capabilities are the same on Instagram.
So you use TikTok as a search engine?
I do, largely. I wrote a story about that for Bloomberg, actually.
Wow.
Have to send it your way.
I have to think about this. I'm going to ruminate on this possibility. John Tucker and I do not do that. But we
I
could.
do. I love the cat
hush it.
videos.
Oh.
Aw,
I'm just
I love cat videos.
kidding.
Of course you're
I could
joking.
definitely watch hours and hours of cat videos.
You're listening to the Bloomberg Intelligence Podcast. Catch the program live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I gotta say, the market wants to go higher because Fastenal just turned around up 2%.
After their earnings this morning.
Yep.
Right.
But you were mentioning it was down. It just turned. I mean, I don't see any necessary headlines like maybe less bad is than could have feared, or it's getting better is helpful. However,
Well, they were
market
initially
just wants to go
blaming,
higher.
the downturn in manufacturing in the U.S.
Yeah.
for
Right.
their woes, and that hasn't improved. So, yeah.
No, exactly. That's, the momentum is we're just going to buy some stocks today. It feels like that's
all
the deal.
sectors, all 11 major industry groups are in the green right now.
Yeah. Let's get some more insight on this. I'm Alix Steele, by the way, Norah Mulinda, in for Paul Sweeney. Joining us, one of the best with the internal details of the market. I love guys like this. And I love Steve. Steve Sosnick is Chief Strategist at Interactive Brokers. And he joins us now. And he looks at all the stuff under the hood, right? Like who's buying, who's selling, what are they doing, what options look like, the whole thing. Steve, is today just a buy the equity market thing? Is there a theme here for you?
Good morning, Alex, and I hope I can live up to that introduction. Thank you so much.
You're so welcome.
But it is pretty much, we did sort of wake up with a let's buy the market. I think we've had a huge change in sentiment this week, and it was largely driven by the bond market. Think about where we were this time last week when we were selling off hard because the labor economy was too good. But so it's all been about, perceptions about Fed rate cuts and Fed activity. It did show you that the market at some level cares, the stock market, I should say, some level cares more about rate cuts than it did about a strong economy if we sold off on a good economic numbers. But once the bond market stabilized and, when we were up around 470 or so, now we're back around 460, a little bit below it on the 10-year. That's really helped stock spirits a lot. This morning's numbers, you were talking about Fastenal, industrial production came in way above expectations, as did housing starts. So, ultimately a good economy should trump all, no pun intended about inauguration. But certainly, and also, I just think that people are back in the buying mode. And you did mention expiration today. We all focus on these new zero DTE options, but it's important to remember that expiration means that everything is a zero DTE option today because they're all expiring today.
Well, Steve, things are looking good, as you just noted. Of course, we ended last year up more than 20%, and we're seeing us in the green today. But there's also this argument that things are too expensive, valuations are too high. Where do you fit in this idea?
Well, Nora, I can't argue with the fact that valuations are high, and really can't say they're not too high, but too high is very much of a relative statement, right? Too high compared to what? And it's, and certainly they're not too high for people to want to pay for them right now. The thing about valuations is over time, they do tend to work. As a timing measure, they stink. Markets can be irrational much longer than you can remain solvent. And so it's important to know that if you're buying stocks here, you are paying a real premium for their earnings power, or in some cases you're paying a lot, even if they're not earning very much. But from a timing measure, that can be problematic today, tomorrow, 2 years from now. It's not. There's no timing component to valuation.
So talk to me about funds and positioning. So we got CTAs, so commodity trading advisors. They're more trend following. We got the vol-controlled funds that reallocate based on where volatility is. Where are those guys?
The trend followers are still in place. I think they got shaken out a little bit, but if you're a short-term trend follower, certainly you're back in the game today, trading from the long side. In terms of volatility, it's been interesting because we have had a fair amount of realized volatility recently. In the last, let's say, 20 sessions, we've had pretty much 9 or so where you've had the S&P 500 move 1% or more. So there has been a return of volatility. You wouldn't know that from looking at the VIX today, which, I like to remind people that, VIX is not strictly a fear gauge, though it does play one on TV. It is the market's best estimate of volatility over the coming 30 days. And we've gone from fairly high anticipation of volatility. We were about 21, I think, a week ago, and now we have a 15 handle. I'll argue there's a lot of what I'm going to call known unknowns coming at us in the coming 30 days, whether it's executive orders, whether it's earnings season, which comes into play very strongly. We have a Fed meeting in there, even though that meeting is not really an in-play Fed meeting. So for the market to flip from having a deep respect for volatility to basically being very sanguine about it is an interesting turn of events in just a short period of time.
Well, we just got CPI and PPI data this week, along with some other economic data. How are you really viewing where we stand right now with inflation in the U.S. and how it's impacting U.S. equity markets?
Well, I mean, certainly the markets love this number. And again, I think that when you put in perspective the move that we had based on, a nice but small beat on monthly CPI and PPI, those are okay. And that's, we certainly want to see inflation moderate, but, we're starting to see commodity prices tick up higher. I know Alix is all over commodity prices, and we have seen those tick up. And, it's nice to look at the core and say, let's exclude food and energy. But ultimately, when you talk to people about what constitutes inflation, they're going to tell you about the price of gas and the price of eggs. And that's not to say things like, lumber and copper and some other things, which have been seeing some steady gains and probably, I'm not a commodities analyst, but I can't see that pressure easing too much with the need to build a big piece of Los Angeles back in the coming days.
Completely right. Weeks. I was just talking to Matt Miller about that when he was on TV with me yesterday. 100% on that. And that's copper too. It's lumber. Steel, it's the whole thing. Scott, you totally, Steve, sorry, I always call you Scott, and I don't know why I do that. My bad. Steve, you didn't disappoint. You totally nailed it. Steve Sosnick, Chief Strategist at Interactive Brokers. We appreciate you. Thank you so very much.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Alix alongside Norah Mulinda. Paul Sweeney is off today. One of the staples that we've seen in the market and the expectations, just ask any bank CEO, is the unleashing of M&A in the next Trump era, right? You got deregulation, lower taxes, and lower rates, and all of that should trigger some massive M&A. So I wanted to get some understanding of maybe what sectors and what that actually looks like. Joining us now is Kristen Pothier. She is U.S. sector leader for life sciences at KPMG, and she joins us now from Boston. So you guys recently issued the findings of 2025 healthcare and life sciences investment outlook. We've seen like $492 billion worth of value so far of M&A in just the last 3 months. What are you guys expecting?
Thank you. And thanks, Norah and Alix, for having me on the line. I am fresh from the 2025 JP Morgan conference in San Francisco, which is where all the healthcare and life sciences companies come to run across Union Square together and start the year and do deals. And I would say that the sentiment is so exciting for life sciences as we go into 2025. And there's a couple of different reasons for that. First, M&A is back, right? And so when you look at that and you look at all of the innovation that's needed for pharma to continue to fill their pipelines, for precision medicine to be able to come to the brink, for diagnostics companies to recover, for device companies to recover, that is the key to what we're seeing. And after a pretty tepid 2024 and some conservatism in 2024, M&A is back, and M&A is exciting within healthcare and life sciences, and then the innovation that it comes with.
Well, you mentioned that AI is expected to be a significant driver of life sciences deals this year, but you particularly point out an impact in tools and diagnostics. Can you talk to us a little bit more about that?
Absolutely. AI is an ecosystem approach in healthcare and life sciences. So it's not just about what it can do for drug discovery, but it's also about how it can just shuttle a patient from one place to another, whether it be in basic drug discovery, all the way through till diligence, and all the way in through patient care. And what we're seeing, especially in tools and diagnostics, is those have always been those gatekeepers or those gate openers to our therapeutics, our targeted therapeutics of the future. With AI, and AI being able to affect pathology diagnoses and able to affect blood diagnoses, it allows us to more carefully, more efficiently, and more rapidly shuttle patients from one place to another. And it's really coming out to be much more effective than human eye as well. So it's very exciting. It was all over JP Morgan this week, and it will continue to be something that's highly valued and highly a part of the ecosystem, healthcare and life sciences.
What type of M&A do you expect? Are these going to be transformational deals? Are they going to be bolt-on deals? What are you guys modeling out?
Yeah, absolutely. And we're seeing a big mix this year. As you can see, there is already several $10+ billion deals that have happened within healthcare and life sciences over the last couple of months, as both our pharmaceutical companies and our device companies really rechange their portfolios and focus on that innovation. We also see a number of bolt-on deals, because as those portfolios continue to shape, there's going to be areas where a pharma company only needs a certain piece of that innovation puzzle to be able to come in, and that's a bolt-on deal. Also, what you'll see in life sciences in general is a lot of that innovation isn't coming from our biggest pharmas, it's coming from our smaller biotechs. And so therefore, just by nature, those would be smaller deals in general. You see the volumes continue to go up, and the deals continue to be bite size and a little bit bigger than that, but it allows us to be able to have that detailed diligence that goes along with it and be able to really understand what's going on with those portfolios.
Kristen, according to your firm's most recent survey, what factors are most likely to impact deal activity this year, according to what you've heard from respondents?
Yeah. The number one is getting the most out of the innovation that's coming through each one of these deals. And what I mean by that is being able to look at the most innovative deal making that's coming through with the diligence that goes along with it. And so that is one aspect of it, is pure innovation. What is innovative and what isn't innovative in the space? The second really is it going to be able to highlight an entire ecosystem and really be able to factor in not only what the pharma's doing, but what our physicians are doing, what our patients are doing, and what our diagnostics companies are doing as well. That is that second component. And then the final component that is really important here as we think about M&A is valuation. And there is a mix of what both our corporates are thinking about valuation and our PEs are thinking about valuation. What we've seen is for our corporates, they are expecting valuations to continue to go up. That's because they've been in this market this entire time. They've been looking at all of these different assets, and the higher the innovation, the more the valuation continues to tick up. Maybe not to the levels expected that were happening in 2021, but right around there. Our PEs, though, on the other hand, are much more conservative. What they're seeing is, from a sell side perspective, if they're going to sell the assets, they have to be able to have valuations that are more realistic. And on the buy side, it could just be because they're very hopeful that the valuations will be a little bit lower, so that therefore they can come in and continue to deal make like we've seen in the past.
So I love that you brought that up, because it's always the bid ask, right? Like, that's the tough part of getting M&A done. And I was going to wonder with healthcare in particular, like what the catalyst is, right? Because for banks, we can see the deregulation and the end of Basel III, for example, or rolling back capital requirements. That's really going to help some of the regional banks team up together, right? Healthcare in some ways doesn't have that particular catalyst. So what do you think is going to get that bid ask there?
I think that continued comfort in new administration coming in and some of the relaxation of the fears that we had in 2024 going into the election, and even just looking overall at what was happening internationally, how we were thinking about innovation and being able to bring access to patients worldwide. As we all get much more comfortable with that space, our clients are saying that is going to be that catalyst of being able to come into this new year, and we've seen it at JP Morgan this week, come into this new year, get excited about the innovation that's happening, be able to pay and realistically do that diligence and tick and tie every single piece of the financial, the commercial, the tax, and other ramifications of each of these deals, and then get them going and moving.
Yeah, expectations, though, definitely high. So we'll see how that works out. Kristen, thanks a lot. It was really great to get your perspective. I love that you were fresh off of the JP Morgan Healthcare Conference. We were there as well. Right. M&A definitely a focus there. Kristen Pothier joining us from KPMG. She's the U.S. sector lead for life sciences.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.